Welcome to Momentum Monday. Today is November 6, 2022. Howard, what do you think about the latest Fed's press conference on Wednesday as the market sold off after it?
Well, just don't fight the Fed. I mean, it seems like everybody's still very hopeful that the Fed will cave, and I think he pretty was clear that it's going to be brutal. So it's just there's just a heavy rotation, right? Like the good news is that there's no panic, but the bad news is there's no panic, right? Like, there's rotation. So the industrials, and we'll go through it at the end, but like money's coming out of growth, right? There's just no, if you believe in growth, like true growth, not like, 7, 8, 10% a year, software and tech has been where it's at. But there's so many unprofitable or slightly profitable companies with too much weight or not enough, not enough margin at the bottom line, and Wall Street's punishing anybody who hasn't cut deeply. So it's just a house of pain for growth. A lot of these, I think we're just seeing a lot of these CEOs at tech companies. The product of a bull market, 2010, 2011 funding, 0% interest rates, and 12 years later, they're starting to see that when the market long-term is a voting machine, and they missed all the signals to get profitable. So, short form, I've got you can get 5% in a 1-year T-bill. So if you think about that, and there's a lot of stocks that you can buy with 5 to 10% dividends right now. So it's going to be tough to convince people to get back into growth, at least unprofitable growth, when you have rates this high. So, as long as there's not any kind of exogenous things, I think the money's flowing into industrials and drugs and some healthcare. But it's a tough. I can't. It's hard. I mean, where'd you end up end of the week? You're mostly cash, I imagine.
Yeah, mostly cash. Friday was especially volatile, up and down, up and down. Just in general, tech is basically in a slow motion sell-off.
It isn't really. Year. Their stocks were down 30%. Like the stocks that weren't getting hit or were holding up, like Team, Atlassian, one I was thinking, the cloud index.
That's new 52-week low for the cloud index. It was down 5%, 6%.
It was down 5%, but a lot of the components, like Team, was down 30% on Friday.
Yeah, that's why it's down only 5. If you look at the other techs, like say semis were up 5%. Yeah. So the market is seeing something here. It's not. There's definitely a rotation. It's not just wide scale sell-off. For me, on Friday, market started to price in a potential reflation, basically, because we saw oil up 4 or 5%. We saw the metal CTF XME was up more than 7%. So this is not a market that is worried about recession. When you see oil and metals and other commodities in Bitcoin and Ethereum ramping up, it's a market worrying about inflation being sticky and just staying with us longer.
I'm in the same position as I was. Like, wish I had even a higher percentage of cash. I've been in the wrong stocks, even though it's been a small percentage. And everything I sold has been correct, and everything I've held has been wrong. So it's hard for me to learn a new trick when I don't have that much time to spend on it. But is there enough relative strength to be bullish on any sectors?
Obviously oil has been doing really well. If you most of them are just setting up near 52-week highs. Either have recently broken out or setting up for a breakout. Very strong earnings season for them, record earnings. And they're still holding despite some of the talks for the administration on taxing their earnings. Definitely holding. a lot of names holding well there. Near 52 guys. Select biotechs are still holding. Obviously, if interest rates continue to go up, that'll be a huge headwind for them. But a few of them will survive. Obviously, defense stocks still doing okay. I mean, two big ones, LMT near all-time highs, kind of consolidating sideways probably after this move, and NOC, we're seeing deep buyers are stepping up near its 20-day as bullish for the sector in general. As I mentioned, the metal space is starting to wake up. So this is something that I would pay attention to see if it catches the real bid. Maybe Friday was just one day. It's not a start of a new trend, but it was a pretty significant day. If the dollar really sells off, there is a chance that maybe tech is going to stop falling for now. But I wouldn't bet on it with the Fed.
I mean, we're right there at do or die. Like if you look at Tesla, I mean, there's a vacuum underneath 200. If you
here's the weekly, definitely, If it loses 200, probably 180.
There's nothing there. Apple's breaking down, and you've got a natural buyer in the whole market. Anybody, but again, sold off that earnings. A lot of people are getting squeezed, and then it's quickly sold off all those gains post earnings. So, and then Google, like no real capitulation. All the analysts still love it. I'm long, but there's just no reason to be long these, other than for very long-term holders like myself. Like
Amazon, the same thing. Just basically erased its entire post-COVID profit. Kind of almost. So
so it is tough. It is really tough. But so the actions in the industrials and possibly the metals and obviously energy and maybe some select corporate bonds, and even like you can go buy bonds and get 8 to 10%. I imagine a lot of these tech stocks, especially if the bonds have been dropping and rates have been going up, so you can go buy some old bond. So it's really, I mean, my industry, the early stage, I've been saying this for 2 years, like prices have been too high. Now they're not just too high. I don't think founders have the experience to understand how long it's going to take to raise their next round. Because if Fed's going to continue to raise rates, you may be able to raise money the first time, but what's it going to look when you go out in a year and a half? So, they're playing roulette. Like, again, like I know the Fed's fighting inflation, but it's easy for me to not write a check. Like, don't get me wrong, I haven't written a lot of checks in 18 months. It's easy for me not to buy stocks. I'm buying T-bills. But it's not easy for the economy going if guys like us, like guys like me, are buying T-bills and not writing checks into startups. And the real problem is don't get me wrong, there's going to be a lot of checks written into startups. The money was raised, it's going to go in. What I worry about is where are you pricing those deals? And have you thought through what this next round will look like? And so, you got to go send someone off on a 10-year journey when the year 1.5 comes around, they're not going to get their next round of financing. This isn't well thought through. So the Fed's in charge, like you asked earlier, the Fed's in charge. And if you fight the Fed right here, you're taking an extreme amount of risk when the risk-free rate's at 5%. And you can go buy munis at 5%, which are triple tax-free. So a lot of this, money that was so loose, including myself, has options. For you, you're able to go short. I was looking at a few momentum shorts, but it's just not what I do.
Yeah, I mean, there's also good ideas on the long side. I'll talk about them in a second. I just wanted to add that.
Go ahead.
A lot of business models that were viable at 0% interest rates are not viable anymore at 5%. Maybe if Uber was started today, they would not have survived or made it that big. So today we're playing a completely different game. 5% and going higher. It's a completely different business environment. And even if you get a lot of people to write checks, it's a different question. What type of returns are they going to get 5-10 years from now? But to my earlier points, even though the market is super weak, we continue to see stocks breaking out on earnings. Like it's still a market of stocks.
Give me
It's
a
just
weekly on that. Wow. So
one example
insulin.
from Friday, just breaking out, all-time highs, very strong volume breakout.
Yeah, big company, $21 billion company.
Yeah, and there are quite a few of them.
Insulin infused. So where's Dexcom? Like, I think that's the biggest.
Also, yeah, another one broke out on earnings, pull back, kind of holding the earnings gap. But it's very important
give me a weekly on that.
To keep the earnings gap.
Yeah.
And there are quite a few names. I mean, even iSurgical in kind of the similar space, broke out on earnings, pulling back. So just pay attention to those names, especially if they hold their rising 20-day. There is a chance that they might leave.
What was that other one, Ivan? What was the ticker?
The first one, PODD.
Thanks. Let me follow that. The other thing is like equal weighted. The equal weighted indexes are doing better than the market cap weighted indexes.
QQQE, I think. Yeah, let's see. But a little bit better for sure.
Well, in the S&P for sure. I forget what it is. RP.
It's probably let's see. No, I don't know.
It's all a disaster. Wow.
But yeah, obviously S&P holding a little bit better. Small caps certainly holding better than large caps.
We're still just trolling along the bottom. It's just
very close to going above the 200-day. I mean, the same for the Dow Jones. Everyone was saying, "Oh, they're back above the 200-day," and then Apple got smashed.
Yeah.
And
So you had some other ideas you're going to share?
I mean, financials are still holding relatively well, especially in the brokerage industry.
Yeah, I mean, they're making the spread. Schwab, Robin,
Schwab,
numbers. So you looked at how much interest. I looked at how much interest.
Yeah.
Interest income Robinhood made. The numbers are staggering, right? Like you just just holding clients' money.
Look at this line, relative strength line, straight up in the past since the summer, basically.
Yeah. And they're making the cuts. So there's going to be the companies that have simple businesses. You're just going to have to separate the ones that have the problem with the Coinbases of the world, and I own a little bit, is that
competition, Howard.
Competition.
They cannot keep charging the same amount.
Volume dropping. Anyways, it's amazing to think back of how bullish people were a year and a half ago, and just I think just this idea of, I don't think people could have. I definitely didn't see interest rates that I'd be buying T-bills at 4.8%. I had this idea that maybe there'd be 2% on your cash.
I think the Fed didn't expect that either. They're surprised too.
Yeah. So it's just, people need to really be careful here. And as careful as I was, I've just been bludgeoned anytime I haven't been careful. So, people can't beat themselves up. They do need to position themselves that the Fed is pretty serious. And the tone is what matters. So yeah, this Arista, let me just see, what's the weekly look like?
Breaking out after earnings again, following through, another name to keep an eye on. Building a big base.
Yeah, base, but again, you want to see it break out. Yeah, there's just not a lot, right?
I mean, I would say it's a little, especially looking at the indices, you would think that most stocks would look like garbage, but actually this earnings season, like every week we're seeing at least 5, 10, even 15 names gapping up, breaking out. Obviously, like a couple weeks later, they're kind of losing it. Like Netflix already trading below its earnings gap, so don't really think that those earnings gap are going to lead to some multi-week, multi-month move. Just take your money and run, because it's very likely that they'll give it back in this tape.
Okay, my man. Well, I wish it was better. Sounds like you've survived pretty well. What would you say? You're like 50% ideas. You're looking on the short side, or
No, I still look mostly on the long side, but I don't mind trading on the short side either. I trade mostly events right now, like earnings breakouts, day one and day two setups. That's where the action is, and especially during earnings season right now. So maybe it doesn't matter for me. Like on Friday, I shorted, net intraday. It's just whatever setup shows up.
Yeah.
I was long PODD too. So I even was long Amazon and Google at some point, just intraday. It just depends on what sets up, but it's definitely short term. It's not a tape to really hold anything for more than 2 to 3 days at max, and even that's a lot.
Yeah, it's just amazing to see these 30% below the 200-day moving averages. But go to the weekly.
Yeah, I mean, the move in Amazon, look, down 51%, Tesla down also 50% from 52-week highs, Google down 43%,
yeah,
Microsoft down 37%. I think Apple is a little bit better, only down 25%.
Yeah,
and not
but
to
I
mention,
think those have the most room to fall. Like that's where the money's hiding out.
it could be Meta down 75%.
Yeah. No, the market's doing its job, moving, beating the people over the head that had big an ego, right? There was all these. It's pretty amazing how it thumps people. But anyways, I think it pays to keep a cool head. I think you got for people that are using margin here. I don't know. Like, hopefully, we've been beaten over your heads for the last 6 months, 8 months. I just remember in November, December, we just turned, you and I, and it just has been just a grind.
I mean, we know that the market is it's forward looking and probably pricing in potential troubles ahead, because currently the situation in the economy is not as bad, neither in the US, neither in Europe. Like here, we think that Europe is in a worst situation ever. And the other day on Friday, I met some people visiting from Spain. They told me they just had their best tourist season this summer after COVID. So I think the situation might not be as bad as people think it is. And the market
Brazil and Mexico both look strong.
The market is kind of starting to pick up that there might be just high inflation, but not
No,
really
remember,
recession. So
even if they get our dollars, like even if they get our travel dollars, which they will with our weak dollar, their margins are shrinking too with inflation. But Mexico also looks strong. I think the Nifty 50
super strong
index. Look at Mexico.
What was in India? Let's see.
But India is like the Nifty 50. I don't know. Is that the India 50?
Yeah,
go look at it.
It's looking good. This is weekly. This is monthly. Yeah, it's not looking bad.
So there is some sides of strength. We've just been so focused on tech and growth in the US for 10 years. It's just some unlearning to do. And people have to put on a different type of hat when the interest rates are 5%.
Yeah, nature is healing. We had big disbalances.
Nature is healing. You do have to do some work though. You have to really think about your risk reward when T-bills, 1-year T-bills are at 5%. You really have to think about how good you are at the market when you can make 5% without risk. And of course, this risk, the US government could go, I guess, default, but they can print money as well. So when that was basically what last year. Can we put that was 1% or 0%?
What are you talking about? The interest rate? I don't know how to pull it up here on this platform.
But anyways, I don't think anybody saw this. And kudos to those that have. I know some people that have been short that I follow as traders. So there have been some people on the other side of this market making coin. The good news is the longer this goes,
the better the opportunity on the other side.
On the other side, but you have to really be patient because no one saw, March and June lows. People thought there was a lot of people. I remember Kramer, I remember Kathy Woods, and then June lows were holding for a while, and now those have been obliterated in many of the tech stocks, just obliterated. And if they're going to keep interest rates high, this recession that everybody was trying to say, the time to buy is when they announce a recession. Well, the recession kind of has been announced and stocks have not bottomed. So I think a lot of people just have not factored in that this could be tougher than most people think. And then real estate in Phoenix, Ivan, is just completely shut down.
Really? But
Shouldn't.
they're not transactions, right? That doesn't mean the prices
No
are going down.
transaction.
Yeah.
Okay, buddy.
All
We'll
right.
be back next week, everybody. Have a great week.
All right, Howard.